a business buyer overwhelmed by the complexity of the buying process? Stick around as our seasoned business brokers shed light on what really goes on behind the scenes to help you navigate your business buying journey more effectively. Hello, I'm Sarah Waziri, and joining me today are David Jacobs and Phil Wolfstein, all business sales experts from Zoom Business Brokers. So let's pretend that I'm a typical business buyer and I have so many questions that I don't find the answer for. So I want to share those with you and ask you to please guide me through this process. As a business buyer, I go through the market, either in your Zoom website or other businesses, websites that are for the sale of businesses. And I see, first of all, on other websites, I see that there are some businesses for sale by the owners, and there are some by professionals like you guys. The first thing that comes to my mind is that maybe if you have a business for sale because you're getting a commission, maybe if I come to you, I have to pay more for the business. Versus if I go directly to an owner who is selling the business themselves. So can you help me understand what is the difference between a business that an owner has put in the market versus something that you guys have put in the market? Phil, do you want to start?
Yeah, I can start.
Sure. Go ahead, David.
Oh, sorry, Phil. Yeah, I mean, I think a business that's represented by a broker, especially, somebody from Zoom where we don't charge a retainer, it's a professional and another set of eyes that has gone through the opportunity and feels that it's a business that's worth selling. That's, it's a sellable business. And the broker is going to go through and make sure all the information has been gathered and presented in a standard format. It'll save you a lot of time as the buyer. Rather than chasing after a business seller that doesn't really know what they're doing or has never been through the process.
Yeah, I would point out that in almost every case, the sales commission is paid by the seller to the business broker. We actually call it a success fee because the business broker is typically compensated at close of escrow based on the price and terms that are acceptable to the seller, and the seller pays that fee, not the buyer. So from the buyer's standpoint, having a business owner seller that has worked with a professional, certified business broker, ideally, and has gone through the various steps in preparation, getting the business ready for sale, looking at books and records, making sure that the organization, the plans are structured and verifiable to you as the buyer, is important so that you don't waste a lot of time and energy. Certainly don't engage in a negotiation or start working with the seller only to find out that you don't have the proper information, the right information, or enough information to make an informed decision.
Yeah, I have to add myself that there is a lot of time that the sellers come to us because they have put their business on the market. They got a lot of inquiries, and then they come to us and say, now what? What should I do with these inquiries? And a lot of time it's even harder when we want to get engaged with those people because they already have exchanged some information that makes what we do even harder, when we come from the middle of the way. Okay, so I come to one of your listings and either on your website or anywhere else and inquire about your listing. And then I suddenly get an email asking me to sign a legal form, and you're asking me so many questions about me that are confidential. I don't want to share with you guys how much is my net worth, how much cash do I have. Why are you guys even asking those questions before I know what business are you selling?
Well, I'd like to answer that, maybe address that. I think, you have to kind of put yourself, if you will, into the seller's shoes. You're talking to the owner, the operator of a business, and who's going to be disclosing confidential information about the finances, about the nature of the business, the type of products they're selling, customers they're serving, that sort of thing. Confidential proprietary information. So if you were the seller of that business, you'd want to know that there's a non-disclosure agreement, that confidentiality is going to be maintained. The seller wants to know, if I'm going to give my information to a prospective buyer, that it's going to be held in confidence, only to be used for evaluation and consideration of this business as an opportunity to buy it. And furthermore, we need to have an agency disclosure. We need to know that our role as professional agents is typically acting in a dual agent capacity, meaning we're the listing broker, we represent the owner seller, but we're also going to represent you as the buyer in the transaction. And that's for full disclosure and transparency purposes, which are essential to have a successful deal, to actually buying and selling a business, especially for those who are listening that have never actually bought a business or sold a business. Transparency and full disclosure become very, very important. Excuse that bouncing up and down. I just hit my computer there. I'm not jumping, but so it's the forms that you get, including a buyer profile, and the purpose of that is, one, so that we, as your agent or representative in this transaction, we know something about you, what your goals and objectives, something about your background and experience, and of course, availability, your financial capability to actually engage with this transaction with the owner seller and to buy the business. So proof of funds or something about your financial strength and ability are fundamental. And I think that's why the seller then can start the discussion, consider you as a buyer with confidence. And that's important.
So David, sometimes I come to you, I fill out the form and I write that I have $50,000 cash. You have a business that needs more than that. Can't you just share the information with me so I know what is this business and what business is for sale?
Well, I mean, I would just add that even the disclosure of the name of the business is something risky for the seller, because, if suppliers get word that a key vendor is up for sale, they could move their business somewhere else. Employees start to get nervous if they hear the business is up for sale, and the stronger employees could leave. So it's a highly sensitive disclosure. And as a business seller, I would only want to make that disclosure to somebody who actually has the opportunity to act on a transaction if everything lines up. There's no reason to go broadcasting that information around town or around the world.
Yeah.
I mean, certainly the confidentiality, the sensitivity in selling a business is extreme in some cases with your employees, with your vendors, with your customers. It's very, if people know that the business is for sale or the owner is considering a sale, can have a significant impact on the business. So I would agree, David, confidentiality is very important.
So, and I would also say that there's a lot of information floating around the internet about how you can buy a business with no money down. I've never sold a transaction like that. I don't know any business sellers that would hand somebody the keys for no cash. So, there's a lot of people out there kind of fishing around for deals that are really unrealistic. And, if you can't afford it, there's no reason to shop for it. It's a very time-consuming process from both the buyer's perspective and the seller. And, if you're looking at something that costs $10 million and you only have $100,000, in the end, you're going to be wasting everybody's time, and you should shop for a business that would sell for around $100,000.
And I have to add that, most of the times what we do is that when we get a listing, we check with our SBA lender partners to understand if this business, we can get loan on this business, or what is the situation what are the conditions they need to see in a buyer to approve a loan. Like when I'm selling any kind of business that needs a person who has related experience in that business, and that person in their profile, I don't see that experience, somebody who is who has been an employee all their life and they never had a business, and this specific business wanted that kind of experience to get approved for the loan, and they don't have that money, then I know that it doesn't work at the end of the day. So I get a lot of emails from people that I'll get a loan, and I know that they cannot get it. So, that's something else that we also consider by reviewing all of those information.
And I would add that I think, most business brokers, at least the ones with integrity, which is most of the people out there, it's not just selling the business. They also want the buyer to be successful. And, like I sell a lot of software companies. If you don't have technical software knowledge, you're not going to be able to run one of these businesses. They're not large corporations where you can just slide in as a marketing person or an accounting person without, computer programming knowledge and skill. So, I don't want to push you into a business and sell it to you only to have you, burn through your savings. And a year later, you're angry with me for selling you the business. So, part of it is also trying to protect the buyer from getting in over their heads, whether that's financial or operationally.
Yeah, that's
A lot of this, like our discussion right now touches on a very important element, which is, there's buying and selling a business is a very emotional, impactful event in your life. For most sellers, this may be the single largest financial or event in their life. It's very emotional, involves your ego. Spend a great deal of your time and energy building, running a business, and making sure that they're prepared and engaged with the right buyer is something that I think is important from a time perspective for everybody involved. Same thing is true for a buyer. If you're going to be your first time to be an owner operator, be an entrepreneur, leaving a corporate world, or just starting and wanting to step in and buy your own business, it's a big deal and it's a big decision. And so for that reason, you want to be looking at, make sure that the information you're looking at, the facts as they're disclosed, the business preparation and facts as you're receiving them are complete, or at least they've been prepared in a way that you can have confidence and rely on those numbers. When you're working with a business broker, that means that the financials of the business, the tax returns, P&L statements, balance sheet, they've been reviewed, they've been gone over, that the financial information that you're going to be evaluating and considering has been prepared. And that's going to make a big difference to you, because trust and confidence and having that being able to overcome not just the financial investment aspects of it, but the aspects of buying a business and thinking and transitioning from where you are now into owning a business and stepping in and dealing with the many, many factors and variables you're going to have to deal with to acquire that business is something that you want to be working, have the support of a professional, but you want to make sure that you approach it in that way, as opposed to haphazardly looking at a business, getting some information, jumping in, finding out later that things are different or things have changed. They're not as they were originally represented by the owner seller, the for sale by owner type approach, because in that process, you lose trust and confidence. You know what you can rely on, what you can believe. And typically those deals do not succeed. They fail. A lot of wasted time and energy. So that's a good reason why you want to have professionals involved that can help you and the seller bring that deal together. Does that make sense?
Phil. Yeah.
And I'll just touch on one more thing. I mean, Phil brought it up. This is a highly emotional transaction. For the seller, it's probably their largest asset, and they've missed out on many personal events, whether it's kids' soccer games or vacations with their spouse or just time off work. So there's just a huge personal, emotional investment in this asset, which is their business. And for the buyer, that you can go and inspect the facility and check the inventory, but the goodwill and the commitment of the employees and those customer relationships, you really have to rely on what the seller is telling you. So, everybody's nervous. And I think working with a business broker who's been through this before, who says, yeah, I know that sounds strange, but it's a normal request, and this is why they're asking that question. Or, hey, you're asking for something, but that's outside the bounds of what's normal. And I would advise against it. I think the advisory part of a business broker is a valuable asset to bring to the transaction. And it kind of keeps, I tell my clients, this train's going to hop off the tracks 3 times, and I'm going to keep picking up and putting it back on the tracks for you. And I think that applies to both the buyer and the seller.
This is the time that the buyer will call me and he is scared, because now he is at the moment that he has to make that decision. So we are always waiting for those moments. But let me get back to where I signed the NDA, buyer profile, and you send me the information, that confidential information. And the first thing that confuses me is this SDE, EBITDA, and when I look at the P&L at the end is net profit. So what is that? Can you explain what is those terms that you guys use?
Yeah,
What are
let
Yeah,
me,
there's, if we can, yeah, I like to say that selling a business for a business owner, it's a process. You're engaging in a process of acquiring the business, or the sellers is engaging in a process of selling that business. Typically, it's 7 to 9 months long from the time of initial conversation until a successful close of escrow. So it's not an event. Buying a business is not something that just happens. It's not an event. It's a process. And the process starts with determining a valuation for that business. And that valuation is what you're initially going to be considering the buyer. You're going to be looking at the considered wisdom and expertise of the business broker and the person doing that valuation on behalf of the business owner and the seller. And that then becomes a basis for discussion. And the process for you, a lot of times, buyers don't understand the various steps that are involved going through this process to a successful close of escrow. And it isn't 1, 3, 2, 6, 4, or 5. It's 1, 2, 3, 4, 5, 6 to get to a successful close. And if you haven't been through it, you haven't bought a business, you really don't know what that is. And you have to, that's why having that professional advice can really help. What does that mean? It means it starts with evaluation, writing, in the case of a buyer, you're going to be writing a purchase agreement, an offer, a stock purchase agreement, or an asset purchase agreement, or an LOI, a letter of intent, and to engage with the seller. And then that's going to be discussed. And then when you come to an agreement on that, then we're going to be going into due diligence. And there's going to be conditions release, which comes at a later point. And in between, we're going to be talking to a landlord, or property issues are going to be involved and discussed. Escrow is going to be opened. And in the meantime, that due diligence part of that process is where you have an opportunity to really look in and verify and confirm the facts, the numbers, and the representations that have been made. And it's also the opportunity for the seller to do his due diligence on you as a buyer. And so they want to know, who are you? Are you qualified? Are you financially capable? So due diligence works both ways. And the business broker facilitates that and coordinates that process so that you get a favorable outcome. And of course, like David's saying, there are always bumps in the road. We like to say every deal dies at least 3 times, because inevitably there's going to be things that come up in that process, issues that arise, things that the seller may not even have been aware of at that time, and we need to be addressed and resolved. The key issue there is transparency and full disclosure. And so as a buyer, you want to make sure that you're aware and engaged in that process.
So Phil, thank you so much. You gave a completely overview of the whole process. Now get back to my question. David, do you want to talk about that SD and EBITDA?
yeah, I mean, I'll give the high level, and then we'll let Phil dive into all the details. But generally, the SDE is for the smaller businesses, and what's the economic value as the owner operator of owning this business. So salary, personal expenses, family expenses that I run through the business, like a car, or cell phones for my family, that people expense. It's a normal thing, but it's really it's in lieu of a salary. And then there's obviously the profitability of the business, and then how its finance gets added back as the business grows bigger and bigger. At some point the business is large enough that you would start hiring a professional management team, and that's when you start looking at more of an EBITDA number. And the way I think about it, and I tell buyers who really don't seem to be clear on this, if you're going to be an investor, meaning you own this, it's passive on your tax return, and you're expecting to receive quarterly payments, and you're going to have a meeting once a quarter with the manager or the president of the company, then you would do an EBITDA valuation. If this is a job where you're going to go into work and actually do something, talk to customers, do the accounting, marketing, write the code, whatever you're going to do, then you should really look at it from an SDE perspective, because you're actually you're working at the business. You're not just owning it.
Yeah, that's great. So that's exactly why, like, sometimes we put a P&L in a CBR, and then when they look at it, they say, so why I cannot see the SDE number in your P&L? The reason is that we use that net profit and then add back all of the things that a full-time owner has brought home with them to get to that SDE number. And we make adjustment, like there are 2 owners getting salaries or they have family members working, they're not getting, we do all of those adjustments to show exactly one full-time owner can make in this business. That's great. Okay, so after I got the information and I see that the business is making as much money as I really like and I want to move forward, I talk to myself, okay, if I want to buy this business, I need to take a look at it. I need to talk to the owner. So a lot of times I get inquiries that, can I go and have a coffee with the owner? So what is your approach at this time? Why can't I, as a buyer at this stage, go and have a coffee with the seller?
I mean, I think that it's important to have the initial introductory call or meeting. It can be in person. These days it can be on a Zoom call or remotely. But I think, if the interest is there, you've gotten the initial disclosure, you sign the NDA, you sign the forms, you've got the initial disclosure of information, a confidential business review or a CIM, confidential information memorandum, or whatever disclosures. Looked at that and analyzed it, and you say, yeah, I'm interested. I think this could be a good fit, and you are qualified. You have the ability, financial ability and background really to consider this business. Looks like a good fit for you. Then the initial introductory meeting or call, and that's really just that. It's just to say hello, introduction, and a lot of times chemistry between the buyer and the seller is important. You get along, clicks, feels good, feels right. Then that can be followed up, obviously, with an on-site meeting or go further from there. But that's a good way to start the process, is have that face-to-face meeting and discussion and see what, this feels good, feels right. And the follow-up to that would be write an offer, prepare an offer, whether it's an asset or a stock purchase agreement. That's a subject conditional offer, but I think the underlying assumption is that whatever offer is made is in good faith, that it's a serious offer with an intention to buy the business or move forward, and then it goes forward, and then it goes from there.
Mm-hmm. Although I think that for different businesses, it's different. Like, for example, if you have a business that can only match to a few buyers and you want to see that chemistry, is different at a type of business that when you put it in the market, there are 100 buyers for that, and you can not definitely make those meetings for all of those buyers. You have to kind of filter and then do that meeting for the ones that want to really move forward, So I think we need to add that. David, what do you think?
Yeah. So, I mean, the way I normally do my deals is that, we sign the paperwork and I talk to all the buyers and get the SIM and all that information. Then we do an introductory call with the seller. And it's really just it's a handshake. And, this is me, this is what I've done. This is you, this is what you've done. And we just get a feel and we talk about the business at a very high level. And really that's to establish like a working relationship. So I'll talk to both the seller and the buyer after that call, do a debrief. And I'm like, do you want to continue working with this person? Or is something about them like off-putting to you? And usually they're fine. I mean, I've spoken to them too. So they're, kind of passing through the screens. And at that point, we get more serious and we'll send some additional information to the buyer with the goal of setting up an hour, almost always over Zoom, but software company, so there's nothing to really physically go see. But that hour call, the buyer's usually building out a financial model and they have some very detailed questions about the business. And, depending on their background, if they're technical, they're going to ask technical questions. If they're financial, they're going to ask accounting questions. If they're marketing, they'll ask marketing questions. And they're trying to, in their mind, like, what is this business and how does it work and where can I improve it? But I think it's also important for the buyer to realize the seller's also trying to understand, who are you and how well do you understand my business? And so being prepared with your questions and like demonstrating knowledge of, this is my business, this is your business, and this is how I understand it works, is what the seller is engaging. Because once people start, due diligence and meeting in person, it becomes very time consuming and potentially very expensive. And you want to make sure that, everybody understands the asset that's being sold. So, there's only one business to be bought and there's only one business to be sold. And You know, the buyer says, well, I'm the buyer, I'm trying, you know, I'm shopping, and the seller, you have to realize the seller's also shopping for the buyer because he or she only needs one. So
Yeah.
be prepared.
I think you have a very important point that I think buyers usually underestimate the emotional portion of the decision for the sellers, that it's like they are talking about somebody coming and getting their kids, and they really want to make sure that that person is capable and will be successful in their business. It's like most of the times we are talking about their legacy, and it's really important for them. It's not just about getting money and going home. You know, it's different.
Yeah. Well, I'll add that, you know, most of these, I mean, I've never sold a business where it was 100% cash at closing and, you know, here are the keys, talk to you later. There's always a seller note or an earn out, or there's some kind of, you know, payment over time. And the seller is trying to gauge, like, am I going to get this deferred payment? Or, you know, are you going to step into my business and in 3 months there'll be nothing left, and then you're going to default on what you owe me?
Yeah,
That's a big part of this, and I think it's why the seller is also checking out the buyer.
Phil, do you want to add anything?
No, I think that's David. That's a very good point. I come across that very often. The seller financing or seller portion of the carryback there is always a concern. The sellers will typically want a personal guarantee collateral, or they want to know not only is the buyer experienced, knowledgeable, but has the financial wherewithal backed by a personal financial statement or collateral, because the assets of the business typically will secure the note through escrow as part of the transaction. So I think David's right. That's, you know, it is important, and then it comes back to trust and confidence. And one of the key goals of as business brokers, one of the things we strive is to make sure that we eliminate those surprises as you go through the process. So it's having, engaging, starting, going through hours or many hours of work, maybe possibly legal expenses, accounting expenses to get to escrow. The last thing you want to do is have 2 weeks before close of escrow is have some significant issue come up that wasn't disclosed, wasn't advised, or that no one's aware of, because that typically can kill a deal. A lot of time and energy can go into that process. So, making both on the part of the seller and the buyer, making sure that full disclosure of any important facts or issues is important to ensure the success of the transaction going when you get towards the end. You don't want to have any surprises.
Okay. I know there are a lot of things that we can talk about, but as the last subject I like to talk about, so when I want to go further in the process, and why do you want me to put an offer or LOI before I want to do my due diligence? What is the reason behind that, and what is an offer or LOI in this stage? What is the role of that?
This is back to what I said before. When it comes to understanding the process, how things are done, the order of business is we draw, aim, and then shoot. It isn't draw, shoot, and then aim later. Okay, that would be the analogy. So it's really easy as a business buyer. I think it's easy to understand that an owner or a seller is not going to want to release their confidential information, their tax returns, or their criteria, how they conduct their business, what their products are, who their customers are, who their key employees are. And they're not going to want to disclose that information before they know that they have a real interested, qualified buyer that's engaged in that business. They're certainly willing to give the upfront information and facts about their business in general. But before you get into verification and validation, say, send me the books and records and start drilling in, the seller is going to want to know that you're the right buyer for them, that there's a serious engagement. And of course, that's memorialized in an actual offer, whether it's an LOI that's going to convert to a definitive agreement, whether it's an actual purchase agreement for assets or a stock purchase agreement. Once you've now engaged with the seller, and the process goes into due diligence, and you have every opportunity to confirm and verify facts and the information, visit the site, inspect the machinery. Everything that needs to be done will be done, but there's an actual process to that approach.
David, you want to add?
I would just add, kind of going back to the last point, it's never a clean exit for the seller. There's always a seller note or a earnout or some, payment over time. So the deal has terms, and it's important for the buyer and seller to understand the terms and how it works. And, what happens if revenue goes up? What happens if revenue goes down? What happens if I miss a payment? Getting all of that agreed to upfront is preferred, because once due diligence starts, especially in the larger deals, you're going to be bringing in accountants to understand the tax implications of certain decisions, and you're going to be bringing in attorneys to craft documents, and you're going to start spending real money on professional fees. And if you're not going to get a deal done, there's no reason to start spending money. So kind of the LOI, like if everything works out, this is what we're going to be willing to do. Lets both sides know that it's okay to start spending some money on the professional side.
Yeah, let me add that some of the things that you say is because you're focused on one type of businesses. Like we usually don't have seller financing for all of the type of businesses, So, yeah, definitely they need to agree on main terms like the price, the terms, how much training they want, those kind of things before they want to spend time digging into the details. And as you said, spending money on the advisors or so on and so forth. Anyways, I think we had passed our deadline. And thank you so much for your time. I think there are a lot of other questions as from the point of view of buyers that we can touch, but we will put that in later sessions. Thank you for your time, and hopefully we'll see you in one of the other episodes. Have a great day.
It was a pleasure. Thank you so much,
Thanks, Sarah.
Sarah.
What a great
Dave,
discussion.
great talking to you.
Bye.
Bye-bye.